All right, the next item on the program is for all of us to get to know all of us. And one more time, we're going to acknowledge the presence of all of our partners and sponsors. And the next panel will be talking about consumer trends and insights. On that panel, we're going to have Uche Onwudiwe, Malgui Akilayel, and Emmanuel Eddie Bala, who's a commercial director. They will speak for another 30 minutes, and the session is about to get underway. Uche is a fast-moving consumer goods marketing and brand strategy professional with almost 2 decades experience. He operates within the Tolerum Group ecosystem, and he contributes to brand and marketing leadership across categories in one of West Africa's major FMCG and industrial distribution conglomerates. Ladies and gentlemen, Onwudiwe Uche, is he here? Also on the panel, we're going to have a commercial director, West Africa at Kerry, who drives regional growth and ensuring global innovations are adapted to West Africa's food and beverage market. He has played a key role in strengthening Kerry's presence in West Africa by aligning commercial execution to deliver tailored ingredient solutions that balance global standards with local market needs. Before Kerry, he held senior roles at 7-Up Bottling Company, Philip Morris, selling cigarettes, Procter & Gamble, selling sweets and other products, and he holds a degree from the University of Salford. Do we have Malgui here yet? Malgui? The moderator of our next panel is Tokpe Ayedun. Do we have Tokpe Ayedun here? Tokpe Ayedun, come take your seat. Come take position already. Go on to that side. Tokpe Ayedun. Uche Onwudiwe, are you ready? Please come take your seats. Thank you, Uche. Uche Onwudiwe. Emmanuel Eddie Bala. Ladies and gentlemen, Mr. Eddie Bala has been here all morning. It's finally, it's about to go down. And last but not the least, Akilayel Malgui. Akilayel, this is your time, this is your moment. Let the session begin. Delegates, participants, and guests, please return to your seats. This is the moment we have been waiting for. Ladies and gentlemen, boys and girls, mommies and daddies, papas and mamas, managers, executives, and directors, let's get seated. Let's get seated. Let's get seated. And Mr. Ayedu is going to make our life sweet. As his name says, Ayedu, he will sweeten our lives. Let the session begin. Thank you.
Good afternoon, distinguished ladies and gentlemen, and welcome to this summit. Again, I'm sure you've been welcomed many times already today. My name is Temi Tokpe Ayedun. I'll be moderating this very interesting session where we're looking at the economics of trust, how this influences consumer behaviors, and what we've seen over time. And I've got a very interesting set of panelists here. Some of them, I think a couple of them I knew by name in the industry. So they will help us to do justice to what we're about to do here today. By way of introduction, let me say that, we know that trust is no longer just a marketing metric. Not anymore. It's indeed an economic asset that directly influences acquisition, retention, pricing power, advocacy, and ultimately, as the gentleman will agree with me, the shareholder value. That's how important trust is. I saw a 2025 Edelman's brand trust report, and it says about 84% of people trust friends and family. About 80% trust people like themselves, but only 58% trust influencers. And I will add brand as well in that category of influencers. So there's higher trust for friends and family, there's higher trust for peers, and lower trust when it comes to influencers and brands. And the question is, if trust is driving growth, how are brands investing in trust? That's what we'll be going through today. So my panelists, I've got right next to me, Uche Owundewe. Uche is an FMCG marketing and strategy professional, brand and marketing leadership in the Toleram Group. That's what he does. And I've got Akila, the commercial director of West Africa for Kerry, to the my extreme left. Akila is driving regional growth, aligning and delivering global innovations in the West African food and beverages market. And in the middle, the man that's a little bit dressed like me, just with a cap, Emmanuel Edibala, commercial director at Twinnies. Do you call it Twinnies or Twinnies? Twinnies. The tea people, I call him the tea man. He leads commercial strategy across Nigeria and the wider West African market. So we are in for a roller coaster time with this gentleman. Gentlemen, welcome to the panel.
Thank you.
Okay. So let's start. I'm going to have you do a 1-minute response to this bit of general question I want to ask. We know that trust has always mattered. As they say in Nigerian parlance, no be today. Right? Trust has always mattered. But why does it seem to matter more today than it did 5 to 10 years ago? Just from your own perspective. So do we start with Akila?
Okay, so thank you very much. So quickly, trust has always been the fundamental foundation to build brands and products generally. So I've had the rare opportunity and privilege to work in B2C and B2B, and I've seen how trust broken or kept has impacted the results of a company in itself. And why is it very important right now? Right now we're seeing an unprecedented level of trials and switching in the Nigerian and West African market, because everybody is coming in with something that glitters, and because of the attention span of consumers, brand loyalty is being tested. So if you do not come in with a product that is reliable and keeps its promise each time, you are at risk of them trying something else and each time. So it's always difficult to be able to keep customers if you break trust. Very quickly in 1 minute. Thank you.
Thank you, Akira. Eddie.
Thank you very much. I think underscoring, that concept around trust is the fact that economy across West Africa, everyone knows is tight. Money is hard to find. Buying decision becomes a lot more difficult. People will not just buy products, for the sake of buying it, routine, but will buy it because they really wanted to meet a particular need. And in that case, just like Akila said, if that is not met, trust is broken, and then there's a problem within the chain.
Thank you, Eddie. Uche?
On my part, I think I would say is the ease of access to information. It's actually, information is at everyone's fingertips right now. So gone are those beautiful days when brands could tell amazing stories and people walk away believing it because they couldn't reconfirm from any other place. Right now, whatever you put on your label, your consumer or your shopper can easily check to reconfirm whether that is healthy, whether it is good, and whether it truly is within your product. So that's practically what is coming through that's driving trust to now be a major ingredient in terms of brand building, service provision, or whatever it might be.
Thank you, Uche. Thank you, gentlemen. So the first question, which I think we'll be going to you, Uche, this time. Personally, I believe high inflation, I think everyone in this room will agree with me as well. High inflation over time has contributed to the sort of fragmentation we've seen in the marketplace today. Consumers trading down, delaying purchases, buying smaller packs. For you guys in FMCG, you understand that very well. They now compare more options and all of that. How must organization fundamentally change the way they build relevance, influence, and purchasing decisions and earn trust in the long time? Uche, with your extensive background in brand strategy, you must have watched, I believe you watched consumer economic shifts. When budget tightens, how should an FMCG brand adapt its consumer engagement strategy to keep trust with sensitive, price-sensitive customers? What's your take on that?
From my experience, trust actually, economic downturns or hard times does not actually bring any risk to trust. It actually just shows whether was the trust really there at all from the very beginning. It exposes it. And what I've seen work across the businesses I've been in, when times actually get tight, consumers reassess value. And naturally, one of the key things that happens is operating margins get threatened. Companies need to kind of isolate their margins. And one of the few things that happens is you move into that tramlining initiative mindset, where you start looking at how you optimize certain parts of your components and the rest of it, which often, in simple terms, is you're compromising on quality. So consumers and shoppers will willingly forgive a well-structured and informed price reduction, increase, but they will not forgive your subtle but easily noticed reduction in quality. That's hit still hard. And I've been in rooms where we give ourselves that confidence jab in the armies, saying words like, it wouldn't really change a lot. There isn't a lot of difference from where we're moving from. It's just a little margin. The consumers won't notice. The truth is they will notice, especially those that are loyal to you. And that, whilst it might give you the short-term returns in terms of benefits and bottom line insulation, there will be that long-term erosion of trust. The other piece, again, is about accessibility. It's critical for brands to drive accessibility, various price points. I've seen that really, really, really work. When I step back and look at Guinness, I look at the role that a SKU configuration brought in terms of driving better recruitment. I'll mention it for the sake of this room, the 45 CL. Which is the medium. We're very much aware previously was the small and the big, but the 45 kind of came at a price point that was easily accessible. Consumers do not forget that. And of course, this is not only to just mainstream brands, also premium brands. Accessible luxury helps the brands re-engage their consumers and recruit more people. And overall, when things are tight and affordability is made available to the consumer, it's an act of empathy that endears consumers, shoppers to your brand. The third one I do remember clearly, I think that happened closely, mostly around the COVID period, showing up for your community, playing a role in the community, giving back. A lot of companies did come up. They supported various parts of their ecosystem. And that builds trust, that built endearment, and that, of course, builds conversion long term. So those three things in my head around ensuring that you do not compromise on quality, remain accessible. Thirdly, the piece around showing up for your community where you operate.
Thank you very much, Uche. I guess what I'm hearing is if you build trust, it outweighs price sensitivity.
Definitely.
Yeah. Thank you very much. So let me ask Akila the next questions, which we've talked about trust, but this will be more about influencing buying behavior. You've been around 7up, Philip Morris, you've dealt with different sort of community networks, you've dealt with different kind of retail channels as well. And in your dealing with these channels and networks, you can't do it the same way. You've got to do it a different way. So what we want to know from you is, what have you learned that you can share with us about what truly influences buying behavior in West Africa?
Okay, so thank you very much. Now, buying behavior is, so I'll keep it it's influenced by various parameters and various things. However, keeping in the context of trust, trust is a key thing that drives decisions that consumers buy. Now, big companies, from my experience, so I told you I worked in B2C, B2B across, and right now I'm with Kerry. I have the privilege of seeing different companies make strategic or non-informed decisions that break trust. Internally, you'd see companies looking at their P&L structure. Trust does not appear anywhere there. And trust is a feeling. And a feeling does not go into P&L, but feeling is one of the critical elements that drives decision on consumer behavior in itself. And it's not quantifiable, but it is the core of why the African buys, because most people cannot read what's on your label. It's how it makes them feel. If they buy your product and they do not feel cheated, they do not feel robbed, they do not feel like they got a lesser deal. And that's where quality comes in. If I pay a certain price, and like he said that, look, the subtle reduction in quality, you think you're smart. Who are you? You cannot be smart here. And because in most of West Africa, most of the consumers don't think they are heard, there is no platform that they go, apart from the new generation now that go on social media and scream. The way they respond is silently. You will start to lose sales, and the consumer behavior will change, and everybody will be in boardrooms trying to figure out what went wrong. And again, I tell you, the critical thing is when you're putting it out, internally, we are designed as companies to see whether it's profitable. Externally, as a consumer, it's how I feel each time I buy a product. Each time, the moment I feel safe, I tell somebody else I feel safe. I cannot explain why I feel safe, because it's in the heart, it's not in the brain. But as a corporate organization, you're taught in Excel and PowerPoint, where you have to be able to translate feelings to numbers, and it just does not work. So what drives this thing is ensuring that you continue to deliver. There's guardrails for quality. You do not drop below that. The moment you have a product in the market and people buy it once, they tell people, and people trust, like you said, it's among peers. How do you buy this? I tell you, I feel good when I felt as if I got a deal. I felt as if I got value out of it. Then your product, it continues to grow, and you continue to get organic and peer-to-peer influenced sales in it. That's one key thing. And just around this topic of trust, where we see people take I just want to say something about, just watch this room now. I'll say something and you'll see. Once upon a time, everybody pays attention. Once upon a time drives a feeling in itself, and everybody here is paying attention right now. To the next thing I'm going to say, it doesn't matter whether it's true or not. Now, one critical thing is we're selling products and we need to guard, at the end of the day, how does it make the consumer feel? I say this to every room. Every time I'm designing a product for a company, they say, are we going to make money? I say, how is the consumer going to feel? Yes, of course, we need to check if we're going to make money, but what is the feeling, what's the experience we're going to give the customer, the consumer? If we do not deliver on that experience in a market that is flooded with something new, glitter, that comes in each time, you're at risk of putting pressure on your team. I've seen where companies start off very well, record numbers, everybody is getting awards, 3 months, congratulating themselves. Then some smart person decides that, let me reduce the quality here so I will improve the numbers on the Excel, on the P&L. The West African customer notices. He buys it, he feels hurt. You've hurt his feeling, you've broken his trust. It costs unbelievably. To regain that trust is so much work. So just to quickly answer your question in a nutshell, what influences consumer behavior? I would say the key word is keeping the trust on the information you've passed on your brand or on your product. If you say it's going to do this, it better does it. Simple like that. Thank you very much.
Thank you. Thank you very much. You know, before I go to Emmanuel, I think what we're also trying to do here is to, you guys are brands people, you're commercial people, and sometimes we're so close to this brand and we are disconnected from the consumer. And that's where one issue, you know, will arise. You know, we believe that we've done the best. The packaging is right, the product is right, and all of that. But I like what I'm hearing from both of you. How do they feel about it? If they feel right about it, they'll buy it again and again, even, you know, without you saying too much about it. You know, they'll buy it again and again. Thank you very much, Akila. So, Emmanuel, Dibala, I want to ask you. So, we've seen massive evolution in how consumers in West Africa view, purchase, and consume in different categories. If we take your own category, my lovely tea, you know, as an example, historically, we take tea in the morning people take it for different reasons. It's grown to be the breakfast, the go-to breakfast, you know, drink you will have. But what we have also seen over time now is that the consumer are now looking for more different health benefits in tea. And now people consume tea almost throughout the day, you know, for slimming, for dealing with anxiety, depression, and all manner of stuff. How is this evolution changing buying behavior from your perspective? And how must the companies adapt their go-to-market strategy to meet this changing behavior?
Thank you very much. And it's also important to note that generally across Africa, when you say tea, it will mean multiple of things. Coffee, tea, and even the local brews, as you have them now. I think, you know, from a consumer, from a buying decision point of view, basically, like I started out saying earlier when you asked the 1 minute question, the economic landscape is fast changing. People that buy your products are well informed. They get information from all sources. Literally everything you need to know about the brand is at your fingertips. On your phone, you could check out the brand and see what you want to understand. So from an organizational point of view, basically what we have to try and start doing is to build, capacity to understand what the final consumer is really thinking, what is really pushing him to make that decision. So before now, you have families who go for weekends, routine shopping, and within that, they'll just pick you and put you in their basket, or just, at a particular time in the week, the house is refilled. But we're seeing consumers asking deeper questions now. Questions around what is really the purpose of this brand over and above, every other thing you tell them. So like you said, for us, across West Africa before, tea in whatever form was a breakfast thing. So people will sit down and take. But the push to understand the purpose for this now is beginning to even create newer stream, of demand. And what am I saying? You will think if a family goes shopping, they'll buy one set of tea, maybe a set of tea bag and just put in their basket and go. But the truth about it is that they may buy across ranges. They want to buy green tea for the health freaks, for people that want relaxation, like you said, maybe chamomile might be an option. So within a family or within one consumer, you can see him go across different segments of the same category within the same day. So in that case, as an organization, you have to be able to then meet them at the purpose, at the point of, the purpose itself, to say why are they buying it, what are they using it for. Health consciousness is getting very big, so people will think about that before making buying decisions. It is as bad as maybe what you will call vices, and apologies to Mario, even for alcohol. People want to drink healthy alcohol. That is how, tough, the terrain has become. You would see an explosion within Europe where people are using more gin than whiskey, and you ask why, and they say, oh, it's less sugar, it's less this, so I will drink that. So the purpose for buying is something that we really need to understand. And, to underpin that point then, if you deal with this problem around the purpose, why they're buying, if you're able to drill down and get the reason what that product is supposed to do for them, then you can be able to formulate strategies that will help you either sell more or get ahead of the curve. What do I mean? In terms of channel, we talk about like the modern trade. You need to understand how shoppers, navigate the store. Studies will tell you that, 60% of people will go left when they enter the store. How do you position then those products that you think will meet their purpose within that? That's fair. In terms of how you lay out the shelves, how do you lay out shelves in a way that the purpose of the brands, can be met? From the green teas to the infusions to, other categories that are just for relaxations and all that. How do you make it easier, for the shopper to shop? So all those concepts will come into being. And I think like most of the speakers said in the earlier session, there's so much fuss about modern trade in this part of the world, but I think all of us are in business. We know that this modern trade is not more than 10% of all our businesses. So it still comes back to the traditional. How do you meet and solve this problem around purpose for your shoppers? And that is where things like retailer education, comes into play. How do you educate, that mom and pop shop in a way that if somebody comes to buy tea or any other product, he can give some basic level of education to say, this will do this for you, this will help you do that. And in that way, you create, like a bigger value chain where he is benefiting, the shopper is benefiting and the organization is also benefiting. Thank you.
Thank you very much, Emmanuel. Thank you. You mentioned something while you were speaking that took me back to many years ago when I was selling soap. And I went to the eastern part of Nigeria. I don't know if the dynamics has changed now, but I remember that back in the days, the eastern part of Nigeria has about 60-70% consumption of laundry soaps in Nigeria. So, as a brand manager, you dirty your hands. You go into area market and look at the traders and all of that and spend time with them. And I heard this phrase for the first time that never left me: the prescriptive power of the channel members. That was before tea and all the health benefits. The channel members have always had that power. And the more, from what you're saying, the more we can educate them as part of our GTM strategy, the more we can educate them, the more information we can give them, the more we can influence how they also influence their buyers. So thank you very much. That's very interesting. But you guys have said different things, from price sensitivity and trust to how to influence the consumer behavior and all of that. And it brought me somewhere, and I want to throw that to anyone can pick it. If we look at the Nigerian consumer today, will you say the Nigerian consumer is more price sensitive or value sensitive? Anyone can have a go at that.
So I think it leads back to what I said, to like price is always very relative. It is the importance that you place upon that commodity that will determine if you think that pricing is fair or not. And I was reading somewhere, I think last week, and the question was, before now, it used to be a situation where you just go on a discount and people will just buy you. So if I'm being sold for 500, I give a 10% discount, I come to say 450, then they will just pick me. No, I think the landscape has changed. People are asking more informed questions because, income is also tight. We've come from 2-3 years ago where we're buying for 300 to almost 1,008. So people are asking the question, around, is this worth it? Is this really worth it? What is it going to do for me? And I've had plays like, when something is too expensive, they will say in the local parlance, now doctor, write down for me. So it does not compulsory that I have to buy it, So I will think, the value, kind of outweighs the thinking around price.
Okay. So Eddie thinks that the Nigerian consumers are more value sensitive. Oche, do you agree?
I totally agree. Nigerians are more value conscious than price sensitive. Because why would I say that? I'll step back a bit. I think it's the 2016 recession when there was a downturn in the economy. Diageo as a business, Guinness Nigeria, posted double-digit growth on their premium brands. You would naturally expect that during a very tight period, consumers would become more price sensitive and walk away from certain brands or services. But that wasn't the case. What simply happens when things get tight is, like Emmanuel rightly mentioned, they start reassessing value. They start asking the hard questions. What you're selling to me, is it worth the value you're putting on the table? And that's where, back to the whole theme of this entire session, trust comes in. And as information becomes readily available, not even becomes, actually more available in everybody's hands, it's easy to on-shelf confirm if there's really value that comes from it. The Nigerian consumer doesn't stop consuming. So good times, bad times, consumption doesn't end. What it's simply doing is probably consuming in a different way at a different time. And that draws me back to what Emmanuel Eddie mentioned earlier around purpose. I've seen one of the key things that has worked in my career where you walk away. Many years ago, it was all about demographics. 18 to 24, 30 to 36, male, works in Lagos, lives in Abuja, socioeconomic class C2D. The reality is that for you to win with the today consumer, you need, like Eddie called it out, purpose. You need to understand who he is. What are his motivations? What are his fears? What are his desires? What are his aspirations? Pardon me to drill back to the beverage industry again. You would see a consumer who walks into a bar with his friends. His evening starts on a Friday. He starts his evening drinking lagers. When you put him through your demographic lens, he probably should end his evening in that bar drinking just a lager brand. But the reality is, it depends on what his motivation is for that day. What are his desires for that evening? What are his aspirations? What has he achieved? And as his motivation and aspiration switches across the evening, that's how you see that same consumer move across a range of brands. He could move from beer into a good whiskey, from a good whiskey, which is supposed to play within a more status motivation, he would jump into a champagne, which is around celebration. And you're asking yourself, if I had mapped this guy based on just demographics, I would definitely have missed these opportunities that existed within his journey in one day. So it's interesting times, and one of the key things I say is, as marketeers, is moment for us to step away from the pretty creations and actually get better, deeper understanding of the people, the market, and actually creating that value, because the consumer of today, the shopper of today, is making those demands from us as a business and from us as marketeers.
Thank you, Uche. Akira, what do you think?
Okay, so I'm a storyteller, so I'll tell you a story. Once upon a time again. Good. So, price value, catch-22, one of the greatest paradoxes. Which do we take first? Over my 20-year career, I've learned the hard way, made decisions that have cost millions of dollars because we thought we were smart. So I'll give you true life stories without naming names. There was a time I was working somewhere and our key competitor, pressure came on raw materials and they had to take pricing up. They took pricing up. Usually we follow because they take pricing, we follow. They take pricing, so the margin it was very thin always, so we're price parity in the market. And this time around, they took pricing because of realities of the market, the raw materials, logistics costs, etc., etc. They took pricing. Naturally, we would follow. And we were like, this is our moment. It's time to be smart. And we cut pricing. Instead, we went the other way around and started popping champagne, thinking we're going to clean up the market, become market leaders. End of the month reached. Sales versus price down had dropped 25%. I was running up and down, explaining and explaining and explaining. Then results came out. We lost, and I assumed that when the results come out, they would have lost 10 times more. And the story would be, despite the fact that we lost, they lost more. Guess what? They priced up, they outsold us. In fact, they outsold us with pricing, so they made more money. We lost money, we lost share, and we had to quickly go to the market to understand. Now, what was the feeling, and I'm going back to feeling that happened? Because Nigerians and West Africans connect dots, price of fuel goes up, everybody goes out and they expect bread will go up, everything goes up and everything goes up. If everything makes sense to them and yours goes down at that moment, questions start to happen immediately. We made a mistake, we changed label and price down at the same time. The guys in the market picked the product and said, the only way we would have been able to reduce price was because we reduced the quality of the product. And that is when the price versus quality. The stocks of inventory, they refused to touch the product and they said it tasted different. Same product. No difference, we just wanted to get share. Now, in my head, I had given them value and I had reduced price, but I got punished for it because there's a perception, and that's why when I talk about trust, it's a feeling that you can't quantify. Perception, because of they've been burnt so long, and it's expectation from market realities. So, based on that, we had to go back, put back the original label 1, take the pricing to what the market was expected, and immediately sales went back up, and people started consuming. And you drop the two products side by side. I worked in a company, one of my companies, where we just changed a simple thing about the label. It's like, you don't touch the label of the product. 30, 40 years. They just changed, and sales collapsed. $35 million loss. Instant. Crisis all over the company. So, when you ask me price or value, there's pricing corridors, and it's not an easy answer to say because of our coinage issue here. So we have price corridors and acceptable margins in the company. The first thing you always try to do is to ensure that whatever you do, you squeeze the margin internally. That's what most companies do. Or find a way to pass it on to keep your profitability. But touching the quality itself will cost you so much. And it costs you so much so fast. It does not cost you so much slowly in Nigeria because of the way the market structure is designed. If you take time and see a lot of companies that have come with a lot of muscle and made some fundamental mistakes on quality in itself and have packed up, you're not smarter than them. The Nigerian consumer would rather, and this is what I see from anecdotal research across the market, you downsize and keep the quality and they know, oh, they've reduced the quantity in it, but he gets the same experience, and you explain, he understands that it's inflation, than to give him a product that he feels outrightly robbed. So I would say value, keep value, pricing is a sensitive thing. Or rather, how would I say it? Don't touch the quality in itself, rather you increase your pricing. Okay. Thank you.
Thank you. Thank you, Akila. Let me ask the audience. Has anyone here switched brands, any brand, in the last 12 months because of price? Just put up your hand if you had to switch because of price. Any category. Show of hand. 1, 2, 3, 4. Okay, let's do it as they do it in the parliament. If you have switched the brand in the last 12 months due to price, say hi. If you have not switched the brand in the last 12 months due to price, say nay. Come on, guys. You are confusing us now. Oh, should we, split and go to the gallery and take a vote then? Yeah. Let me ask again to the audience. If a brand takes a 15%, 20% price increase, but the quality and the value you see in that brand is still great, will you still buy it? Well, there will always be alternatives. There will always be alternatives. So the question here is, you guys in this room, and I suspect that most of you are probably in this field. So you're probably not giving me the, you're giving me the, I'm close to the brand response. So I want you to speak for the guys out there. Do you think the Nigerian consumer, a typical Nigerian consumer, not you guys, a typical Nigerian consumer will be happy to pay for a 15-20% increase on a brand they've been buying and they truly value?
Thank you. All right. Tell us your name and go on.
My name is Budakute Zumbentora. Answering the question, I don't agree with the increase in price. If you have 15% increase in price due to the level of economy we have today, a lot of people will deviate, will look for other brands. Because I have a lot of examples, I have a lot of friends that I know were using a lot of products, but when the price went up, they have to look the other side. So for me, if you keep the quality, it's fine, and increase the price, but it's not everybody that will buy.
All right, so you don't agree?
Yes.
You have been able to convince us and not to confuse us.
There's the lady in the, yeah.
Good afternoon. So I own a retail store in Surulere.
Thank you.
So I'm going to use a particular product. When she brought that product to my store, we were retailing it for 500. Now that product is 100. And she has still consistently maintained her standard and her customers. So for a particular class, quality is their determining factor for why they continue to pay more. As long as the product remains the same, the quality remains the same, they will pay more. But for a particular class bracket, if you change a product from 200 to 250, they will drop your product.
Thank you very much. Can we
Just
take
one
any other comments?
last response?
One more comment. Let's come to this side. There's a lady raising her hand there. Keep going, keep going.
Hi, my name is Lily Ubaja. I run a distribution company, so we're at the front lines. Here's what I can say. If there is a 15 to 20% increase, that's a big jump. If the increase is happening across the board, where it's happening with other products, you don't see that drop in sale. But if it's isolated to this single product, there is definitely going to be a drop in sale.
All right, I'm afraid that's the much we can take. So back to our panelists as we round up.
Thank you. Thank you very much, audience. Yeah, so I think even my panelists have kind of alluded to that. It's not a straightforward, it's contextual as much as possible. Okay. I've got a question. It's not, so first let me apologize to the organizers. They didn't ask me to ask this kind of question, but I need to ask, and you will understand. It's more of a futuristic question. So I saw an Accenture's report that says 74% of the respondents say they would trust a personal AI agent to help make purchasing decisions. So you can get where I'm going, because that's the age we are now and the future we are going into. So if we look at this and we say in the next 5 years, do you guys think the Nigerian consumers will trust AI recommendations more than human recommendations? This is a question for you guys. Yeah? Akira.
So, let me start very quickly. So, we're facing one of the most complicated generational shifts ever. And it's really a marvel to watch the next generation and how they behave. Now, there's a key thing about the next generation. They value, how do they put it? They value accessibility over ownership, collaboration over competition. Very key. AI is driven by a community gathering of trend, knowledge, facts, and then guides them to make easy decisions based on what peer reviews have already commented on how they feel about a certain product. Ease. They've moved away from the the complication of trying to make choices when something else can bring out the pros and cons and tell them where best. It's like you asking me 20 years ago or 15 years ago when I was much younger, for the other generation here. If I was going in from maybe somewhere in Lagos and I needed to find my way around, I was going to rely on, please, the next person, where do I follow, where do I follow, where do I follow? And if you ask this question here sitting and say, would AI, would Google Maps become the future where I would no longer ask people on the road? It's a self-fulfilling prophecy. It's inevitable. AI is the future of the way consumers will assess features, values, benefits of products and will drive shopping preferences, 100%.
Thank you. Thank you very much. Uche?
Yeah, in the same space with him, but I think it would vary by category. There will be certain categories where AI will be predominantly the alpha and the omega in terms of recommendation. And there are other categories I do believe will still need that interpersonal relationship recommendation for people to actually pick it. But overall, I believe that we would get to the point where AI would be the go-to. People today pick up AI tools and drop their medical examining report in it for AI to actually give them a read on it, despite the fact that just at the base of it, you would read it telling you that it can make a mistake. But people are willing to trust it with their health. So it's coming. It's a behavior that's growing. I expect that over a couple of 5 to 10 years, we should see some major shifts, but there will still remain certain categories where it would be personal recommendations from friends, family, peers that will drive the choices that people will make.
Okay. Thank you, Uche.
Yeah.
Manuel.
Okay, so I'll take it from Akila and Uche and put a bit of spin on it. No doubt, AI will continue to make inroad. Penetration is going to get higher. You're going to get more people using it. And, you know, in terms of sales and marketing, also you have to consider that, you know, generations go, generations come. It's what you call the Generation X that is coming, you know, forward now. And they are the people that are looking at this tool. So definitely, you're going to see increased usage and decision-making based on that. But there's something that is going to also happen in this space on the back of this. And that is the fact that if you look at this generation coming as well, sometimes you're totally shocked by the way they view things as well. A public, you know, let's say an argument in the public space, you're shocked at how, just take say maybe the politics of Nigeria in a couple of years back. You know, while everybody is going this direction, they may be going that direction. Why? They have access to information. But having said that, the caution in Africa, for me, like most of the panelists said earlier, and Uche alluded to, is the fact that in some categories, it will still be a lot of one-on-one, especially in the ultra-premium category. It will depend on one-on-one. Nobody's going to buy a Rolls Royce and just checks it up on, you know, on Google and then makes like a decision. The other point for me also is what we thought in Nigeria about 10 years ago when modern trade started like making inroads into Nigeria. The thinking was that by now, 10 years after, modern trade might be like 50% of the business or more. People said it's the future. Organizations invested ahead of the curve, only for us to know that 10 years after, we're still here. It's still 10% of the business. So it's just to take a balance of that and then be able to gauge.
Thank you very much, Emmanuel. So let's round off this session. And I want to put this question to you guys. Have a 30-second response on it. So we do know that there are countries now where happiness is one of the KPIs that they look at. So let's make this an interesting one. If suddenly your company, the organization you work for now, decides that the only or the most important KPI they want to look at is trust, what's one thing or the first thing you guys will change to make that KPI work and track it well? What's the one thing? Just 30 seconds response. Should we start with Emmanuel this time?
Okay, what I would change, and a lot has been said about that earlier, it's there seem an over-reliance on data, And like everybody said, or all the speakers have said, this is not something you can put your hands on. It's not in the balance sheet. So it's a bit of a mix of guts and data. I think that fine balance will need to come through.
Okay. Akira?
So for me, it would not be more of change, it would be more of reinforce. Personal belief for me is people come before the business. Take care of the people and the business will be fine. If the people are not fine, the business would suffer. Never get tempted to think the business is more important than people, no matter how bad it is. That's for me.
Thank you. Uche?
On my part, it will be more around, I'm trying to put this word right, it will be more around information communication.
Yeah.
I think there's a lot of power in communication. If every single person ties back to the people piece that you spoke to, if every single person within an organization is quite clear on what the North Star is and their role, it helps to build trust because I am clear of what I bring to the table and what's expected of me and where we're headed.
Okay. Gentlemen, thank you so much. I hope your organization decides to make trust a key KPI and you have the chance to implement the reinforcement or the change that you talk about as what you want to do. Thanks for your time, and thank you, lovely audience.
Thank you all. Please hold on. Have we taken the questions from the audience? That's it. On behalf of all of us, Mr. Ayedu first. Okay. Mr. Malgui, not from Malawi. Thank you very much. Mr. Eddie Bala, accept this token for us. Silver and gold we have not, but this we have. We give unto thee. Thank you very much. Mr. Onwudaiwe, Och he. Mr. Onwudaiwe, Onwudiwe, Uche, thank you very much. We appreciate you. Thank you for the work that you're doing. At Toleram is standing tall because of people like you. And last but not the least, Mr. Ayedu, we thank you for moderating the session. Thank you all for your time.